The pattern day trade rule is a rule that any margin account under $25,000 has to abide by. And basically, what it means is you're allowed 3 day trades in a 5 day window. And if you make a fourth one in that 5 day window, your account's gonna be banned for 90 days. You won't be able to open up new positions. You can still close positions or sell positions, but you can't open up new positions. Now, what do I mean by a round trip? Is when you buy a stock or a security and sell it in the same day. Or in terms of selling options, you sell a position and buy it back. That's 1 day trade. If you do it on the same day. If you wait a day, not a day trade. So there's a couple ways to get around this, but I want to say that don't try to fight it. So it's there as a safety net. Use it to empower yourself. If you have to abide by it, you have to be selective about the positions that you enter because you know you have limited scapegoats, basically. If a position goes against you, you only have 3 outs before you're taken out of the game. Some ways to get around it, though, if you really want to, would be to open up an account at another brokerage, split your capital between those, and now you have 3 day trades at one brokerage, 3 at another. And just remember that these day trades, they reset every 5 days. So if I make a day trade on Monday, then one on Wednesday and Friday, I'm at 3. The following Monday, the first Monday is gone. The other 2 are still on until I get to that Wednesday. Then that one goes off. So it's a 5 day rolling window. It's not just Monday through Friday and you reset. So that's just something to think about as well. But basically, what I wanted to say is just be aware that it's a rule. I think over the last week, I bet a lot of people got in positions that they wanted to get out because the market was moving up and down. And people may have used a lot of their day trades. And if they get messages about being in violation, I just want you to know what it was. And it's not the end of the world. You can always open up a new brokerage account if you want to skip the 90-day wait. But be more selective about your positions and think about how those actually will play out. Like, you don't want to be managing positions that much because, well, it becomes unmanageable. Another thing you can do is stick to a cash account, but then you lose access to spread plays if you're doing options. And if you're doing a cash account, what happens is you have to wait for your cash to settle, and that can take anywhere between 1 and 3 days, depending on your brokerage. I think the typical amount is 2 days. So if you have a $1,000 account, you make a trade for $200. The next day, you only have $800 available to trade. And then the following day, that $200 comes back because the cash may have settled. So that's how a cash account would work. So you get unlimited day trades with a cash account, but the restriction is that you have to wait for the cash to settle before you can trade. Now, if you're doing options with day trades, there is ways to use options to lock in losses or gains so that you aren't using a day trade if you're trying to exit a position or you don't have any more available to you. An example would be like if you bought a put, it's in profit, and you want to lock that in, you could sell a put that's out of the money to make it a debit spread, and that kind of locks in your max gain and limits your max loss a little bit. Like, there's still room to gain or lose a little bit, but you kind of set like your extremes on how much you can gain or lose at that point, so you can secure the position without closing it and using up a day trade. So there are ways around it, and if you want to learn more about that, leave a comment and maybe we could talk about it. But I think that kind of wraps up this video, guys. The pattern day trade rule is there as protection for new investors while they're trying to learn. You don't need to do 1,000 trades to make a profit. Just pick out a few good setups that you like, take advantage of them, and the PDT rule should not really be an issue if you're playing some safe stuff. Now, if you're Wall Street butter and you're trying to buy all these short-term options and swing trade them like crazy, I mean, you might want to stick to a cash account at that point. Good talk, guys. I'll see you tomorrow.